Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we got another short trading week, right? We got New Year's in the middle of the week, 2 days before, 2 days after. Short trading week. Now, what have we had? Well, we got a market that's kind of price for perfection, right? I mean, the Warren Buffett indicator, it's over 200%. Normal is down around 100%. So this market is definitely overvalued, and we have a lot of complacency. Complacency just that everybody thinks the market can only go up. And maybe they're right. Maybe the Moon Boys have this right. Maybe it is different this time. I don't think so. Look, the Fed is starting to lose control, right? We have 30, 36, 37 trillion dollars in debt. And they know that the government cannot afford to pay for the debt unless they cut rates. So what have they done? They've cut rates. 50 basis points, 25 basis points, 25 basis points. So they cut rates 100 basis points. What's happened to the 10-year bond? It's gone up 100 basis points. Fed cut 100 basis points. Bond has gone up 100 basis points. Exact opposite reaction that the Fed wanted. They have lost control of the market. This has never happened before in the history of the world, where the Fed cuts a whole percentage point and the bond market goes up a whole percentage point. They've lost control. The market is out of control. Now we're moving into 2025. Now there's going to be something that triggers this market, some type of black swan event. Now it's interesting. You know, silver could be the black swan event. Look at the COMEX exchange right now is having trouble making deliveries of physical silver. Why? Because more and more people are taking physical instead of just taking the contract price. They want to get the silver off the exchange. They want to break the exchange. Same is happening in London with their exchange. They're taking the physical off the market. Now, I'm not sure who it is that's taking the physical off the market. Some people say it's China. Some people say that it's just billionaires that want to protect their wealth. They know that there's a paper market. You see, what there is a paper market, that the paper market, 400 ounces for every 1 ounce of physical silver. So as you pull those physical ounces of silver off, they cannot be replaced. They have no way to get them back, right? So if there's a point next year, which is very possible it's going to happen next year, nobody knows the exact timing of this stuff, but next year, what if the COMEX could not make delivery? We broke the COMEX. What would that do to the price of silver? Skyrocket. Price of gold, skyrocket, right? Okay, now what they're trying to do right now, they're trying to sacrifice our dollar to save the debt market. See, there's no way we can pay this debt back, right? So we're going to have this long-term inflation. Now they're calling it 3%. It's really about 7-8% right now. So this long-term inflation is not going to go away. They're sacrificing the dollar. You take 8%, and that's on the low end. We're going to go well above 10%. But let's just use 8%. You do that for 10 years. Well, you've taken away 80% of the purchasing power. This is terrible for retired people. Say you were getting $4,000 a month from the Social Security, right? Well, that's going to lose 80% of its purchasing power just in the next 10 years, right? Now, if you plan to live longer than 10 years, you're going to have a problem, right? I mean, you're going to be, instead of $4,000, you're going to have about $800 to live on. And retired people, there's going to be a big problem, right? They're not going to be able to do it. Other people that don't get Social Security, they get a pension, right? Now, a lot of these pensions, they're underfunded. Oh, especially our California pension plan, so underfunded. You're going to be lucky to get 20, maybe 25% of your pension 5 or even 10 years from now, right? If you're planning to pay in, and you're retiring, you're not going to see your pension. You're not going to see the money. It's become another one of these Ponzi schemes. Social Security, a very big Ponzi scheme. But we got a problem, right? You see, when the credit market breaks, and the credit market will break, if the COMEX were to break, that would break the credit market. That could be the black swan that breaks the credit market. Once that credit market breaks, we have a big problem, right? Because the credit credit market breaks, the banks, they won't loan any money. They won't loan any money. How's someone going to go buy a house? They're not, right? Everything reverts back to cash prices. Now, you can trade with the barter, right? Barter system, gold, barter, silver. Some people say you can use Bitcoin to do the bartering. Maybe you can. I don't really know about that. I want it in my physical possession, but there's going to be a barter system that takes place because the banks, there's going to be no credit allowed. You will not be able to get a car loan, a house loan, or any loan for that matter. They'll be calling in your lines of credit. They won't be extending more credit, but this will be a big problem. Big problem because nothing will be moving. Nobody will be able to buy your house. Now, what if someone has to sell their house, right? So that someone, somebody's got to sell a house. Maybe someone died. Maybe they got divorced. Maybe they got relocated on the job. There's no buyers because there's no credit. No credit means that only cash buyers are there. And these cash buyers are not able to pay with market rate. Market rate being the last sale, what the comps show. They're able to pay about half of that. And that's about where I see the housing market going to when this breaks, right? All those digits on the screen that you got, they're going to be meaningless, right? Maybe you'll still have the digits. That I'm not even sure of, but those digits will be pretty meaningless because you'll have to transfer them into dollars. That will be pretty worthless. Now, a lot of people have dismissed the BRICS. You've heard of the BRICS, right? Brazil, Russia, India, China, South America. Anyways, the BRICS they have their own, well, it's going to be called the unit. It's a settlement currency. It's not a currency that you go out and you buy with every day, right? It's not like you go to the grocery store, but they're going to be trading amongst themselves. What's this going to do? Well, they're not going to need dollars anymore, right? Right now, people use dollars to buy oil, right? And oil, it used to be like 95% were paid for in US dollars. Now it's down to about 60%. It's starting to break. It was the petrodollar. We set Kissinger over there in the 70s to make the deal with the Saudis. They would only take dollars and we'd protect them. Well, now they realize we can't even protect ourselves. How we're going to protect them? So they take any form of payment at this point. So we have a problem with that. So they're now trading amongst themselves and they no longer need US dollars. So all these dollars are come flooding back into our system, right? Causing the hyperinflation that we're going to start to see. We're not just going to see 3%, 8%, 20%, 50%, we're going to hyperinflate. All those dollars that we've been printing for all these years are going to become flooding back into the system. Now, a lot of people say, but Mike, you haven't heard about the milkshake theory. Well, actually, I know well about the milkshake theory. Milkshake theory means that everybody has their debt in dollars, right? So they need to pay their debt back in dollars. So they think the dollar is still going to be valuable. But when this breaks, they're not going to be paying back the debt. So they're not going to need those dollars. So the dollars, where they go? They come flooding back this way, right? So that's a big problem. Now, here's the other thing that's going on right now. These central banks all around the world, what are they doing? Well, they're buying gold. Why are they buying gold? Well, gold's the only other tier one asset aside from the dollar, right? Okay, so they're out there buying gold. It's a tier one asset. And instead of holding dollars, which used to be about 80%, is now dropping down towards like 50%, right? And gold is creeping up as to what they're holding as a tier one asset. Now, it's fascinating. People ask me, but Mike, we're the United States. Why aren't we out there buying gold? Well, a lot of people believe we have 8,000 tons of gold. They think we have that stored away in Fort Knox. Maybe we do, maybe we don't. I don't really know if it's there. A lot of people don't know if it's there. A lot of questions about that, right? So maybe we have the gold, but I don't think we do. But here's the thing. What we should be doing, you are correct, right? We should be using our money, our printing press, right? We could print unlimited amounts of money, right? And we should be doing that. And we should be sucking all the gold from all around the world. So when we do go back to the gold standard, we'll be able to reset. Now, don't fear the reset if you have some real money stored away, right? You'll get through it. Everything will be fine. And we'll be able to prosper after everything crashes, everything resets. So you don't really need to fear the reset. But the United States, they should be buying gold right now. But you know why they don't? It's pretty much arrogance, right? It's arrogance because they think their dollar is so strong that it'll never be replaced. So they don't want to buy gold because it would look bad to say that they were buying gold when they got the dollar. And everybody knows the dollar is pretty much worthless, and everybody would start flocking to gold. But if we do it quietly, we start now, we can start to rebuild our reserves. I don't think we got that 8,000 tons, but we got a printing press that's unlimited. And for some reason, people still take our dollars around the world. So if we hurry, we can still use them to purchase gold and rebuild our gold supply. We'll see how that happens, but it's not going to happen because, they're going Bitcoin, right? Bitcoin reserve, it's going to save us. You know what? Everybody should buy Bitcoin, right? 50% of all the Bitcoin's owned by people in the United States. 50%. You know what percent of gold is owned by people in the United States? Down around 2%. 2%, but 50% of the Bitcoin is controlled by the U.S. So why not make a Bitcoin standard? Because nobody else wants it, right? Once this thing comes crashing down, you're going to see the real price of Bitcoin, which would reflect about zero. Now, granted, it's not going to go all the way to zero. All you Bitcoiners are going to get real upset, but you could easily see it lose 80% again, right? It's up here at 100,000, could easily drop below 20,000 again. Now, that would put MicroStrategy's out of business, right? Because his average price is 60,000. It drops to 20,000. He just hands the keys back, and then he just closes his business down. And plus, he's levered also. Oh my goodness, it's going to hurt when it happens, and it will happen eventually. Now, maybe he's got another 5-year run. Nobody knows the timing of this. Everybody wants to know, Mike, when's the real estate going to crash? Mike, you say stock market's going to drop 50%. It only goes up. Everybody knows that. Just look at Apple. Apple only goes up. I hope Apple continues to go up. I live right next door to Apple, right? As long as that keeps going up, my house keeps going up with it. People want to live right next door to Apple, right? Because that's a booming company. I hope Apple stock keeps going up, but I don't think it will. See, a lot of this is going to come crumbling down. Now, these BRIC nations, they're a factor in this whole thing. Central banks, they're a factor in this whole thing. You can see how the pieces are starting to come together. And what's really interesting is the COMEX exchange. They are getting so many orders to take physical possession of the gold and silver. They're not able to meet these orders. And when that happens, when they default on delivery, it's over. You got to get the real money now before it's over, because when it's over, you're just going to see a straight shoot up in price. I mean, old record highs, it ain't going to matter at that point because it's just going to go through the charts. It's going to just take off. And this is a big problem. And when this happens, the debt market crashes, which is the credit market, right? Nobody can get loans anymore. You won't be able to get money out of the bank. You won't be able to get extensions on your credit card. Everything will become a barter thing. So that's why you want to have just a little. You don't need a lot, right? Just take a little bit of real money to have around so that you can do barter until this thing starts to settle out, and then we can start to prosper again. But this has to happen. It's inevitable it's going to happen. Nobody knows when. People tell me, 37 trillion in debt doesn't matter. They're not even talking unfunded liabilities. Well over 100 trillion at the present market value, over 200 trillion if you extend it out. But those unfunded liabilities are increasing about 3 trillion a year. The debt's increasing about 3 or 4 trillion a year. Everything is, it's not sustainable. You can tell me it doesn't matter. I'm telling you, at some point, it's going to matter. Nobody knows exactly when that is, but you want to get a little bit of real money. Just stick it aside, just in a safe place, so you have it. Maybe Tall Mike's all wrong. Maybe I'm full of hot air. Maybe I don't know anything. Then you got a little extra money anyways, right? It's a little safety fund, a little emergency fund. That's all I'm telling you to do. Anyways, if you like this stuff, give me the thumbs up. I'm Tall Mike. Get out there, everybody. Enjoy the day. Bye-bye now.